Okay, so you're a creator, maybe a freelancer or an author, and you're making money from the US, even though you live somewhere else entirely. You've probably wondered, what's the deal with US taxes? It can seem super complicated, right? Well, it really doesn't have to be. In the next few minutes, we're going to break down exactly what you need to do to handle your US tax stuff, and most importantly, keep more of your hard-earned money.
Let's start with a number that should definitely get your attention: 30%. That's right. If you don't have the right paperwork in place, the IRS can withhold a flat 30% from all of your US income. That is a huge chunk of your earnings. But here's the good news. It's completely preventable. And we're going to look at how. So you might be thinking, does this really apply to me? Well, if you're getting royalties from Amazon KDP, pulling in ad revenue from YouTube, or freelancing for clients in the US, then yes, this is absolutely for you. The US government calls this US-sourced income, and believe it or not, you are legally required to report it. And this brings us right to what I call the 30% problem. This is way more than just a little compliance headache. Ignoring this can seriously impact your finances. For a lot of creators, just not doing anything can easily cost thousands of dollars every single year. So what are the actual risks here? Let's break it down. First, you get slapped with that default 30% withholding on every dollar you make. Second, you miss out on any chance to claim tax refunds, and that's money you might actually be owed back. And third, this can cause real problems down the road if you ever want to get a US visa or even just open a US bank account. So how do we fix this? Well, the whole process really hangs on one single thing: the ITIN. Think of it as your key. It's the one number you absolutely need to unlock compliance, get that withholding rate down, and at the end of the day, keep more of your own money. So what in the world is an ITN? It stands for Individual Taxpayer Identification Number. You can think of it as a special tax ID that the IRS issues specifically for non-residents. You know, people like you who aren't eligible for a US Social Security number. It's basically your personal ticket into the US tax system. And let me be clear, this is not optional. You simply cannot file the tax form you need, the 1040-NR, without an ITIN. But here's the catch. Trying to get one on your own is slow. You're looking at a processing time of 7 to 11 weeks. That's a huge delay before you can even get started on your taxes. But here it is, the biggest roadblock for most people. To prove who you are, the IRS requires you to mail them your original passport. Yeah, you heard that right. You have to send your most important travel document overseas and just hope for the best while you wait. It's a huge ask. This really leaves you with two very different ways to go. There's the hard way, mailing your passport, risking it getting lost or damaged, and waiting for weeks on end. But then there's a much smarter way, using what's called a certifying acceptance agent. These guys can verify your identity over a simple video call, which means your passport never leaves your site. And with a 99% approval rate noted in our source, it's kind of a no-brainer for both peace of mind and speed. Okay, so once you have a plan for getting that ITIN sorted, the rest of the process is actually pretty straightforward. We can break down the actual tax filing part into a simple 3-step plan. Here's the whole plan. Step 1, gather your documents. This means collecting forms like the 1042-S or 1099 from the companies that paid you. Step 2, fill out Form 1040-NR. This is the one designed specifically for non-residents. And finally, Step 3, get it all submitted by the deadline. And hey, quick note, for most non-residents, that deadline is June 15th, not the April 15th date you always hear about in the US. So, why go through all this trouble in the first place? Well, this right here is the most important part. By filing that Form 1040-NR, you get to claim tax treaty benefits. See, the US has agreements with tons of countries that can slash your tax rate on royalties from that scary 30% all the way down to 15%, 10%, or in some cases, even to 0. This one step is where the real savings happen. All right, now that you have the game plan, let's talk about what not to do. Avoiding these common slip-ups is just as important as doing the right things. So let's quickly walk through 4 critical and potentially costly errors you'll want to avoid. Okay, first, whatever you do, never use someone else's social security number. That's a really big deal, a serious crime. Second, don't just ignore the IRS thinking they won't notice because you're not in the country. They have info-sharing agreements with over 130 countries, so they'll probably find out. Third, make sure you file Form 1040-NR, not the standard 1040. That one's for US residents, and it will just cause a mess. And finally, like we talked about, please avoid mailing your original passport. So let's tie this all together and talk about the payoff.
I really want you to start thinking about this differently. This isn't just some annoying chore you have to do. Filing your U.S. taxes correctly is actually a really smart business move that goes way beyond just being compliant.
Let's just quickly recap the 3 biggest benefits here. First, you're legal and compliant. No more stress or looking over your shoulder. Second, you dramatically lower your tax withholding, which means more money in your pocket right from the start. And third, you're building a clean, positive U.S. tax history, which is an invaluable asset if you ever want to do more business, travel, or banking in the States.
At the end of the day, taking these steps puts you back in the driver's seat. So the final question I'll leave you with is this. Is your U.S. income working for you, or is a huge chunk of it just working for the IRS by default? The choice and the savings are yours to make.